Let me ask you something uncomfortable. Why will you show up to work every single day, but you won't show up to your own financial freedom? You'll protect your boss's expectations, you'll protect your paycheck, you'll even protect your professional reputation. But when it comes to building wealth, you negotiate with yourself. And you're not lazy, you're human, and the data proves it. Let's take the gym industry. Health clubs see an average annual retention of about 60%, no, between 60 and 70%, which means that between 30 and 40% of members leave every single year. Now, here's the most telling stat. 50% of the new members quit within the first 6 months, and many drop off just after 90 days. Half, half the people who are motivated enough to join are gone by the summer. Even more revealing, 67% of gym memberships go unused. 80% of members who attend less than once a week in their first month and cancel within 6 months. Attendance drops from 63% in month 1 to 33% by month 6. And yet, boosting retention by just 5% can increase profits by 25 to 95%. Retention drives profitability, not signups. Execution drives results, not intention. So what changes this? Well, this is where it gets really powerful. Members in the fitness group classes are 56% less likely to cancel. Strong onboarding programs can increase retention by up to 75%. And the highest retention of all, members who hire personal trainers. Why? Well, because somebody else is expecting them and they paid for the accountability. They're committed socially and they don't want to waste their money and they don't want to look inconsistent. Again, it's not motivation, it's structure. So let's translate this to real estate and wealth building. So a lot of people I talk to say, I want passive income. I want financial independence. I want to own my own investment properties. But the real estate investing drop-off rate looks just like the gym memberships. They listen to podcasts, they buy courses, they watch YouTube, download spreadsheets and talk about it for years, but they never execute because there's no structure. They're not accountable. There's no expectations. There's no one asking, hey, did you analyze that deal? Did you call your lender? Did you submit the offer? And so they stall, just like unused gym memberships. Now let's talk about what's at stake. Federal Reserve data consistently shows that households that own real estate have a dramatically higher median net worth than renters. And when you look at households that own investment real estate, the net worth difference becomes even more significant. Why? Well, because real estate creates leverage, appreciation, tax benefits, cash flow, equity growth, and rents increase over time. And real estate is a great inflation hedge. It's one of the most powerful wealth building tools available to the average American. Yet most people never buy even one investment property. Not because they lack information, because they lack execution and structure. So just like gyms, acquiring a new gym member costs 5 to 10 times more than retaining them. And attrition accounts for over 40% of the lost revenue. In investing, the biggest loss isn't a bad deal. It's never starting. Opportunity cost of waiting for 5 years can be enormous. Imagine this. If a property appreciates by 4 or 5% annually, plus rent growth, plus principal pay down, 5 years of delays compounds dramatically. The cost of inaction compounds just like returns do. So why do people quit? So let's talk about the psychology behind it. Why do people quit gyms? Why do people stall when they're investing? I think there are 3 things. 1, social accountability. We're all wired to avoid disappointing others. Another is loss aversion. We hate wasting money more than we love getting it. And 3, commitment and consistency bias. When we commit publicly, we follow through more often. That's why you show up for your job, you show up for deadlines, and you show up when somebody else is expecting you. But left alone, you can rationalize delays. So let's talk about real estate investing. And should you buy a course versus get into a program? Buying a course is like buying a gym membership. It feels productive. It feels like you're taking action. It feels like you're making progress, but it's passive. Getting in a program, hiring a coach, that's like hiring a personal trainer. It creates deadlines and social expectation, financial commitment and feedback loops. And it requires behavioral change. And change is what builds wealth, not information. When someone hires a personal trainer, they stop being a casual gym member. They become a client. And when someone hires a coach or joins an investing program, they stop being an aspiring investor and they become an investor in action. That identity shift changes behavior, and behavior compounds. So I have a question to ask you. If owning real estate significantly increases your net worth and accountability dramatically increases your ability to follow through, then the most expensive decision is trying to do it alone for too long. 5 years from now, you'll either say, I'm glad I committed, or I wish I'd started sooner. The difference won't be intelligence, it'll be structure. That's why I built the Real Estate Launchpad as a structured execution program. It's not theory, it's not motivation, it's execution. Weekly implementation. We'll do deal analysis, we do lender calls, offer strategy, accountability, because I know something most people don't. If left alone, you'll protect your employer before you protect your future. With structure, you can protect both.